all having a good start to your day. So one of the questions that I'm sure a lot of you guys are wondering, especially if you're new to swing trading, is how long will it take for the market to recover? I thought that this would be a pretty useful video, just looking at previous patterns to having a better understanding of how long, based off of history, it takes for the market to recover. And I thought that I would use TQQQ as an example, which is a NASDAQ ETF. And I'm going to go back a total of 2 years, right? As I'm sure a lot of you guys have been waiting for the market to recover, a lot of us are setting up for our swing trades. So please, if this video gets you one step closer to your overall goal, I hope that you consider dropping a thumbs up and, of course, subscribing. So going back, this was during the very beginning of the pandemic. This was on February of 2020. We could see that we began to pull on back around February 20th of 2020. And I'm going to identify when it breaks below the EMA as that's when it's selling off. And then when it breaks above the EMA on this day chart, that's when it begins to recover. So we can see that from the 20th. The date is down here just so you can see. It's from the 20th of February, and then it begins to recover during April 8th. So this one took a little bit over, if I'm not mistaken, over 40 days, right? So from February to April, that's how long, definitely a little bit over a month, almost a month and a half for this thing to begin to recover. It peaked, it began to pull back below the EMA line right around September 4th, September 3rd, and then we broke back above the EMA right around September 29th. So almost a month, but not quite a month. We peaked right on over here. We broke below the EMA line. This was again year over year, right around February 22nd. And then we broke back above right around the end of March. So this one took a little bit over a month and 10 days as well. We broke below the EMA right on over here. This was, March, April. And then we pulled on back above the EMA line towards the 24th. So from the break below to the break above, that was a total of about 20 days. Peaking right on over here, breaking below the EMA line. That was on September 20th. And then we broke above the EMA line the following month on the 13th, so a little bit under a month. So you can see that on average, I would say even at its absolute worst, right? Taking the pandemic as an example as the absolute worst. The moving average is what tends to act as a support, which is this green line right here, at least for the past 2 years, which is why, again, I love buying the dip on tech stocks, on TQQQ when the market pulls on back. But it's very easy to buy the dip, but it's so much more difficult with asking the question, well, how long do I have to hold before we begin to recover? And just looking at the history for the past 2 years, even at the absolute worst during pandemic conditions, it took a little bit over a month. And from where we're at right now, I'm going to take when it broke below the EMA line, which is right around the 3rd or 4th of January. Once the market opens tomorrow, we're going to be on the 18th. So that is going to put us a little bit over 2 weeks of the market pulling on back. And again, I viewed when it broke above the EMA line as confirmation. So that means that we have about a week and a half before the market, based off previous patterns, begins to trade above the EMA line. We've seen, some recovery even quicker in just 20 days, which would mean that, by next week, we should be seeing an overall reversal at the absolute soonest. But at the absolute latest, this would probably mean that around the first week of February, if things go according to plan and based off of previous patterns, that we should be expecting a recovery based off of how long in the past it's taken for the market to recover. I thought this would be useful for some people that are just getting started to take the past into consideration to set more of a realistic timeline, right? Some people think that the market recovers in just a couple of days, in just a couple of weeks. But as you can see, sometimes on average, it takes about a month. The great thing about this is that when it gets going and when it's bullish, on average, right? So now talking about from the break above the EMA, we can see that it broke above around the 11th or the 3rd, right, of November. And then we broke below the EMA line around February. So we're bullish for about, 2 to 3 months, and then we break below, right? We're bullish for about 2 to 3 months, and then we break below for about 1 month. We're bullish for about, 2 months, and then we break below. So taking that into consideration, all the pros and cons of swing trading, you can see that we're definitely more bullish than we are bearish, but when we're bearish for about a month. And again, I thought this would be something useful for our beginner traders to understand. If you guys have any questions that you guys would like me to answer, please comment down below, or you guys can feel free to send me a message on Instagram, and that's going to be that second link in the description. I really do appreciate you guys' time. Again, if you guys want to join our swing trading challenge, we're just kicking off the 2022 new year with this swing trading challenge. And if you want to learn a little bit more about it and being able to watch me trade live every single day, please feel free to click the first link in the description, and that will break down exactly what's included in the all-new Learn Plan Profit 2.0, so you can join us as soon as tomorrow and watch me trade live at market open. I really do appreciate you guys' time. I hope that earned your thumbs up. Please consider subscribing, and like always, let's make sure that we end the year on a green note. Take it easy, team.